Here's my 2021 market outlook, right? Because we don't just teach people how to buy apartment buildings, but we also buy apartment buildings ourselves through Nighthawk Equity. Now, because we're in the business ourselves, we spend a lot of time looking into the crystal ball to help us make better decisions. And I want to share with you my outlook, our outlook for 2021. And to help us with this, I wanted to bring on a special guest just for the next few minutes, which is Drew Kniffen, president of Nighthawk Equity. Drew Kniffen, how's it going today?
Going great. How are you, Michael?
All right, so I want to get a kind of a checkup here, right? Because there's a lot of things been going on with COVID and rents, and there's a lot of concern about the rent levels, the demand, the occupancy, collections, that kind of stuff. And I wanted to see if you can give us a little bit of an update and outlook for what you're seeing over the next 12 months or so.
Yeah, absolutely. Yeah, no problem. I mean, I'd say there's an amazing dissonance between what we see in the headlines and what we see both from listening and talking to market experts, as well as what we're seeing in our own portfolio. So the headlines are the sky is falling, there's a tsunami of evictions coming, et cetera, et cetera. And quite simply, that's not what we see. And I think we'll get into the details here, but we're much more sanguine about the future of apartment buildings for a lot of reasons.
All right, so there's headlines and there's reality, right? So everybody knows what the headlines are because we're watching the headlines. But what is actual reality?
So the first reality is that real estate is a local business, right? We've always heard that location matters in real estate. So if you're just looking at like the headline data about national trends, it's not very interesting because no one buys 1/1000th of every house in America. We buy a house in St. Louis or an apartment building in Dallas, right? And so you need to know your submarket. And the big headline that I'd say we're seeing is that gateway cities, the big cities in America, the New Yorks, the San Jose's, the Chicagos, are performing poorly for a number of reasons. And the Sun Belt cities, where the demographic trends are moving, continue to do well. So at a high level, that's how I'd sub-segment the market, and it's what we're seeing in our portfolio and in the data.
Yeah, when you look at the headlines, you see rents are down, 1.4% year over year, whatever it is. So obviously rents are going down, or are they?
Right. So rents are going down very substantially in those big headline markets, which is where the newspaper writers tend to be from. And so they're going substantially. We are seeing rents flattening out, but not going down substantially in our markets. And so we've incorporated that into our underwriting. Our underwriting on deals nowadays is 0% rent growth in year one. But we're not, our data isn't showing it going down, and we're not modeling it going down.
That's interesting. Okay, so why are rents not going down in some markets?
Absorption, right? So absorption is how many new people are moving into the area and how many new apartment building units are being built. And if more people are moving in than units are coming online, then there's positive demand pressure on those units. Whereas if people are moving out of New York City, if they're moving out of San Jose because they can move to Denver or Texas and do their job remotely in the COVID era, it puts downward pressure on prices. So that impacts the rentals.
Okay, so where are people moving to? And then maybe why? I mean, this could be speculation, but we certainly know where they're moving to.
Broadly speaking, they're moving south and west. They're moving to lower price areas. And the more expensive, denser cities, especially in the COVID era, people are saying, I don't want to live here anymore, because all those areas are built upon the idea of not socially distant. And so they're expensive and they're very not socially distant, and people are moving. We see this in the data.
And good point. You're saying that, hey, previously before people were tied to their job, which was geographically, but now people discovered, oh my gosh, I can actually work from home. And well, if that's the case, I don't need to live in San Francisco or New York. I could be wherever I want, right?
And moreover, I can take my tech salary and move to the middle of the country and have twice the lifestyle. You see that a tremendous amount of people going into Texas, for instance, going into Austin as a big market. We have a business where we're all remote. You're East Coast, I'm West Coast, but we can run a business with technology, and location is less relevant than before.
Yeah, that's exactly right. Now, Huntsville is another great example, right? Cost of living, super low. Quality of life, super high. Amenities, opera, whatever everything is. Yet, the jobs are really high paying. They have aerospace jobs and other science jobs. And so people are like, man, even though I'm maintaining my salary, I'm almost like doubling my income because my expenses are going down by half. Like
you see big employers, whether it's from Washington, D.C. or from California, moving lots of offices to these markets, Atlanta, Texas, Phoenix, because the cost of living is low, the weather is nice, and they can do stuff remotely.
That's interesting. All right, Drew, what's the bottom line here?
The bottom line is the sky is not falling. You need to look at the sub-markets that you're in, and where the demographic trends are positive, you can still do well.
Right. So the point is, like you said, real estate is local, is regional, and some are going to be areas are going to be declining, and some people are actually, in fact, still growing and will continue to do so. I think that's an important lesson because we get sidetracked by the headlines, and then we have we're afraid and we stop doing stuff. So hey, I appreciate you coming on here and giving us a quick update, Drew.
Glad to be here, Michael. Thanks so much.
Want to hear the full podcast? Then just point to your favorite podcast app and search for Apartment Building Investing, and you'll find me.